I suppose the backdrop for today's price action in equities, in bonds, in digital currencies, gold, the backdrop is obviously softening rhetoric out of the U.S. administration, both from President Trump and the Treasury Secretary Scott Bessent. Met with neutral commentary, I would argue, out of China yesterday, and a bit more aggressive rhetoric out of China this morning, sort of refuting claims that they've been in ongoing discussions with the U.S. and also, I don't know, you could say putting out an ultimatum, a soft ultimatum in a way, saying if you'd like to continue the conversations that the unilateral tariffs against China should be lifted. So playing a little bit of hardball out of Beijing. I'm curious, gentlemen.
Isn't it all air right now on both sides? Isn't it a little bit of? I'm sorry to interrupt you, Dylan. Victor. Isn't it a little like kind of? I'm sorry. Isn't it a little? I didn't do that on purpose. Isn't it a little bit of like kind of? Everybody just kind of right now.
I would argue we were sort of in that mode. I mean, when you're going 100%, 125%, 150%, 170%, like the numbers kind of didn't matter. They didn't even they got silly at a point. Softening rhetoric was probably the path of least resistance. And the big question on my mind was once you saw it from Trump and the U.S. administration, what we're going to see out of China. But I'm curious. I thought once we saw that, I was going to look at the bond market to see whether or not the bond market would confirm the rhetoric, whether they believed what they were hearing out of the U.S. administration. My personal opinion was if you saw a flattener, if you saw lifting in the long end, if you saw them buying the long end, that would sort of be a little bit of a confirmation. If you saw a gold reversal, it would be a little bit more of a confirmation. For one day, you saw a massive sort of day and a half reversal in gold. You saw a bid here in bonds. I'm here to ask you, Thomas Sosnoff, does the changing in the rhetoric on both the U.S. side as well as the rhetoric coming out of Beijing, does the new price action, does this in any way change the way you're thinking about risk in bonds, in gold, and in equities more broadly? We'll start with bonds at 115.
Well, they're 115 really right now. No, I think bonds are the play in bonds is only a short premium play for me now. If they get cheap, I think bonds are a buy. I'm not a seller of bonds above the market. I'm a buyer below. But rhetoric is a catch-all, and So I'm not sure that I love the term if you start a fight with somebody, okay, is it really rhetoric, or is that just the defense mechanism that's the total catch-all? In other words, I
get what you're saying.
I don't know that rhetoric is the fair term. I mean, hypocrisy might be better. There's other terms. I don't think this is rhetoric. Is like when you're in a Cold War. Okay, that's rhetoric. Both sides just total bullshit. You can't. You don't trust anybody. It's all garbage. But when you're the instigator and you pick the fight, it's not rhetoric because somebody else responds to you. Okay, that's not rhetoric. That's an answer. That's a response.
It once changed. It's not like there wasn't any tariffs on the other side. So
it's nothing to do with that.
I think that's fair. What you're saying is it's not a change in rhetoric so much as it's an acknowledgement.
It's a response. It's an acknowledgement.
It's an acknowledgement. Maybe it should have been a
response 20 years ago, 10 years ago, 5 years ago. Maybe the response is just late. I mean, the argument that I see here is more not what he's doing, but how he's doing it. Like the application of it on paper, you can argue that 50% like it and 50% don't.
No, you can't. You can argue that.
Yes, you can, because that's how the voting went, and that's what we voted.
Voting
for.
is different.
So hold on. Let me finish. Don't
confuse voting with.
Let me finish my sentence. 50% of 100% of the Republicans like it, and 100% of the Democrats don't like it.
No, that's not the case. You're not following what's going on right now. 80%
Let me
of people
finish
don't
my
like
thought.
higher prices.
Let me finish my thought. What they don't like, what I think a lot of people can agree on, even those that voted for it and liked it, is maybe the application of how it's being presented. That's what I'm saying.
First of all, you're confusing.
I'm not confusing.
You're confusing a topic that you're trying to steer this to what Victor's actually saying. And all I'm saying, responding to Victor, is that it's not rhetoric.
In your opinion.
It's a response. And if you're asking me how,
I'm saying it's a delayed response. It's something that should have been taken care of years ago.
that's irrelevant. If we're talking right now about the market's response to what's happening, I think that the market is becoming more comfortable with the back and forth, which is what normally happens. First thing that happens is there's shock. And the second thing after shock is that there's a normal economic response. And then after that comes a normalization period, a commoditization period, where everything gets priced. Everything gets normalized. Everything gets absorbed by the marketplace. And that's what you're seeing right now. That's why the moves, they go from being extreme, which is that pop in volatility, to being muted, which is what you're starting to see now. I think going forward, what you're going to see is a much more measured response to all of this kind of news and to all of these, crazy announcements. What you should be concerned about is, in my opinion, what you should be concerned about is you don't want your cabinet members consistently defending you in public, because it gets to be tiresome over time. And that's what the market doesn't like. The market doesn't really care about. The market can handle virtually anything, but it doesn't like surprises. It takes time to normalize those, and that's what's happening right now. And it doesn't like a continuation. Like, the market wants you to understand and recognize stuff eventually. And that's all the market asks for. The stock market's pretty resilient. It doesn't ask for much. Like, how much can one person or one administration really impact the price of Nvidia or the price of Apple or what's going on in Amazon? And the answer is not that much, unless they screw up royally. And the market never anticipates a royal screw up. So the rest is just chatter. It's just made for TV news. It's made for financial media. There's nothing much to it.
It seems like.
I mean, inflation is lower. Prices are higher, right? I mean, inflation is low. Would you say?
No, I would not agree to that.
Would not agree to that. Would you have measured that how?
It seems like you're a little bit more comfortable with markets here and with the current risk. In other words, you're not. It doesn't seem like you're looking at this as a bear market rally. You're not looking at like there's a bunch of logistic people who are squawking that in the next 2 to 3 weeks you're going to end up seeing more supply shortages, less shipments from China, less things on the stores.
I don't care about that. It's already priced in. Everything. Right. Most of it's priced in. I don't think this. I'm not ready to call this a. I don't think the last couple of weeks is what we would define as a bear market. Okay, it was a sell-off. I don't think it's a bear market. A bear market to me is something that's extended. It's more painful. It takes a lot more. I'm not ready to consider. I'm not ready to call this a bear market. I think this is more of a correction, and I'm also not ready to throw the towel in, because I think this market is. I don't think there was ever a point where prices became inefficient, and I don't think there was ever a point where I felt like there was systemic
dysfunction.
Risk.
I mean, bear markets start with a correction, right?
Yeah, agreed. Bear markets do start with a correction.
Okay, so
I just don't feel like this.
Only time will tell, right?
Yeah, I don't feel like this was. I don't feel like this was anything that made me lose sleep. Do you know what I'm saying? Like this. We talked about this yesterday, Vic. This is not the kind of sell-off that made me think, oh man, the world's in trouble right now. It's not. It just. I didn't get that feeling. I just feel like the market structure, the efficiency of pricing, everything that I'm looking at. Was there some dysfunction? Sure. Was there Was there a breakdown of confidence? And I would say, sure. Was there some weird prices in some of the risk-off assets, like, or some of the flight to quality assets? Sure. But I think that's all kind of normal, in different cycles. So no, I don't think that this was anything that we're going to be talking about, for decades to come.
So you basically think we're on the you think we're on the downswing of this, and you think cooler heads are going to prevail. He's angling towards an official off ramp, and that within the next 90 to 120 days or so, you think this is going to be moving towards a resolution.
I think
not a situation where we could see re-escalation.
I think Trump gets tired of even his own stuff. Like, based on the last administration, he got tired of his own stuff after a certain period of time, and then he changes tune, he mellows out, he does whatever. I think this was come in, hit him with hit him with
the blue lights.
Yeah, hit him with the blue lights. Just hit him over the head, gangbusters. Just go freaking crazy, do everything I said, and then you got 4 years to unwind that. And I really kind of feel like, he thought he'd come in and change the world. He realizes that's not going to happen, and everything will start to normalize, I believe. And I just don't think anybody can keep up that pace of, that pace of change. It's not the way governments work. It's not a business. And so it's a little bit different. And I think that everything is going to start to normalize, and you're going to see a much different going forward. I think the process is going to be much different, because they're going to start to realize you can't keep up that pace, number one, and it's too risky political, number two. It's too risky. And there's no public support for it. So you're going to end up just normalizing and then just pulling off your agenda a little bit differently. And that's what I think is going to happen.
There's a part of me that wants to ask you a question. It's total conjecture.
Sure, go ahead.
I kind of don't, but I'm going to ask it anyway. So if I take your framing here, and there's one side of this equation that is looking for an off ramp, and you're on the other side, it's almost like a liquidation. That the other side wants to liquidate their position. What is the price that you charge? In other words, do you think China is in a position to play hardball and exact a price here in order to find the off ramp?
I think because we are the biggest player, the off ramp becomes, everybody accepts the off ramp because it's better for everybody wins. If you give an opportunity to walk away from this mess, everybody wins. Like, to continue the fight, nobody wins. If you give them an off ramp, everybody wins. So I think when you're the biggest player and it impacts everybody, you get an off ramp. I do.
Okay, but in fairness, a few days ago when we were imploding, you were saying he was destroying the markets.
Destabilizing, I said.
Destabilizing, yes. Destroying the markets.
Destabilizing.
Now you say in 2 days, 48 hours, that they're absorbing it? I mean, it sounds a little bullshit to me. I mean, so no, again, it's just bullshit. The markets being the markets.
First of all, the markets have been destabilized under all this stuff. But he's
maybe volatility is good. The new norm's going to be 20 to 30.
Really believe that?
Probably not.
You don't.
I think, you don't. But it can be for the next couple of months.
Maybe, but you don't.
We've had 60 days of this in the past.
You don't believe.
I'll go with that.
Okay, fine. I'll give you that. But you don't believe long term.
No, not long term.
You know that sometime in the next year or two under this administration, we're going to be at 14 and 12.
Yeah, sure. Volatility. Yeah.
Volatility.
Yep.
And everything's going to be normal. Mm-hmm. That's all I'm saying is, fair. There's no need to destabilize markets, but he felt he had to try. Mm-hmm. And now I think that experiment is slowly, working its way to a resolution. But your question, Vic, about an off ramp, sure. I think everybody gives them an off ramp. I think that's everybody wins with an off ramp.
I kind of agree with that. I'm not so sure that Peter Navaro doesn't find a microphone between now and the next 60 days, and if so, and work his way on to national television. And if so, we're going to get another volatility spike.
He'll
Let
be
me ask
the
you,
first.
the gold, silver.
He'll be the first out,
Uh-huh.
in my opinion. He'll be the first to go because you'll need somebody to you got to sacrifice somebody. He'll be the first to go.
I made a joke on Twitter that at least hold him, keep him away from a microphone until 5,800. Then let me get a good fade in. Let me get my positions in at 5,800. Then give him a microphone.
Listen. Nothing would make me happier than the S&P's at 10,000. I mean, to be fair, like
Now you sound like Kathy Woods, but go ahead.
no. I'm just saying, like I'm making the argument. I don't want us to crash.
No, I get it. Nobody does. I don't want us to crash either. Even if I have short delta,
Yeah, but you
I
can
don't
crash
want
in
to.
both directions.
There's nothing. I'm in this business. There's nothing.
10,000.
I don't want to. This is a business that I love. I don't want the bottom to be dropped out and everything that we've worked for integrity wise to disappear. So I think I'm going to stick with America's too big to fail, and this is just a response, and we will commoditize all this stuff.
Mm-hmm.